these senators are really, they're fatigued. They're really tired of gathering every 6 months when the next crypto company blows up and goes to zero. I mean, just last week, Genesis filed for bankruptcy. Every week, there's another one going to zero because they're totally unregulated and they keep issuing tokens that are worthless. The latest, game that FTX did as well as Binance is they issue a token that supposedly gives you some special ownership of the platform. That's not true. You own nothing. There's no rights to it. It just gives you trading discounts if you own the BNB or the FTT token. But if you look at, let's say, the reason FTX went to zero is CZ, the competitor of FTX, Binance's head guy, put 550 million tokens.
Kevin O'Leary, a Canadian entrepreneur, has raised apprehension regarding the tightening regulations of cryptocurrencies in the United States. O'Leary stated that following the collapse of FTX, a crypto exchange, U.S. lawmakers are irritated about constantly dealing with the failures of crypto firms. O'Leary has faced criticism from the crypto community for supporting Sam Bankman-Fried, SBF, the disgraced co-founder of FTX, for which he was paid $15 million to be a spokesperson. Towards the end of last year, the collapse of FTX, a crypto exchange, caused investors to quickly exit. However, in 2023, Bitcoin has risen by 39%. Don't forget to subscribe to our channel and turn on the bell icon for upcoming uploads before we proceed to the video.
Oh yeah, as soon as I got wiped out on FTX, my holdings there, I took every other asset that was not in those wallets and moved them up to Canada under the OSC order inside of BitBuy. So now I've got a regulator keeping an eye on my account. Everything came out of the US. I'm not putting anything ever into an unregulated exchange again. But I also loaded up on Bitcoin when it was in that $16,000 to $17,000 range. But here's something I've learned everybody should think about. Everybody's got to do their own diversification. But I used to hold 32 positions. So I'd look at the vol on 32 positions. Now I only own 7. I'm getting the same vol. You don't need to own 32 tokens to get the vol. You can just own a few and you'll get the same volatility up and down. So now I'm more concentrated in a Bitcoin, a Polygon, an ETH, that kind of thing, HBAR, very, very selected projects, very selected tokens, and I have liquidity in, and I like to stake them. The good news for BitBuy in Canada, it's one of the only 2 licenses where you can stake. So I've got my Polygon staked there, which is great, and you're getting some kind of yield, and it's regulated. So what I'm telling everybody to ask me is, look, you can get the whole exposure to the entire crypto market with under 10 positions. And that's the way I'm playing it going forward. I don't want to manage 32 anymore. I got a real lesson in life on that whole thing with FTX. But now I'm still back in one of my best performing asset classes. You said it, crypto since Jan 1. But you try telling anybody that. They're so negative on crypto. I like it when everybody hates a sector. It's like energy 18 months ago. I hate energy because Biden hates energy. That was the time to load up.
Kevin O'Leary anticipates that regulated trading platforms will prove to be more lucrative investments than unregulated ones in the coming years as regulatory bodies tighten their grip on the cryptocurrency industry. O'Leary believes that the value of regulated exchanges is likely to surge in the next few years, whereas unregulated ones are at risk of being eliminated by regulators or losing all their value. Now, let's proceed to the video.
FTX was a startup. A big one, but a startup. And we all invest in startups. I don't care if you're private equity or you're venture, there's capital around for startups because the returns, if you get a successful deal, are extraordinary. So if you look at data back from 1954 in the Boston area where venture capital started, and you look after all those decades, 8 out of 10 deals either fail or are living dead, and 2 out of 10 are extremely fantastic outcomes and pay for all the other 8 mistakes times 20, times 30, times 40. So for every FTX, there's a Google. For every Lehman Brothers, there's something else. There's always something going to zero and something going to the moon. That's just the way it is. And so when you look at due diligence, you ask yourself, okay, let's say we had done more due diligence. Would that change the outcome when 80% fail? Probably not. Now, they fail for various reasons. In this case, alleged fraud, and we'll see how that plays out. But this doesn't change anything about the way I'm going to invest or how any of those other firms you just listed are going to invest. And the diligence done here, I don't know if you know this, but Tiger spent millions with Bain Capital to diligence this platform before they became one of the lead investors. And everybody knew that. So there is a lot of, when a deal like FTX US comes out and it's so hot to get an allocation, they're not worried about due diligence because they know 8 out of 10 times it's going to fail. They're hoping they're going to get one of those unicorns. The one thing I'm very, not proud of, but happy about, when the FTX US deal, when the word got out that I got allocated equity, I got inundated by institutional capital, high net worth hedge funds saying, you got to give me a piece of your allocation because you owe me. We've been doing stuff together for 20, 30 years. But I had this gut feeling, not that I was involved in something nefarious, but it was so nascent, so early, so volatile. I said, no, I'm not going to put anybody else's money into this thing. I'm going to keep my own dough in it. That's it. And whether it's a success or a failure, I'm not going to put someone else in front of that freight train.
Furthermore, he remarked that the recent SEC's decision to fine Kraken for $30 million should alert the cryptocurrency industry to abide by regulations. Drawing attention to the SEC's enforcement-focused strategy in regulating the cryptocurrency industry, O'Leary advised with caution, stating that the regulatory climate is becoming increasingly stringent. Regulators are receiving support and commendation from senators and congresswomen who are declaring their dissatisfaction with the current state of affairs. Mr. Wonderful emphasized the importance of adhering to regulations, stating that it is essential to steer clear of Gensler at the SEC. He went on to say that FTX provoked the regulators and has now incurred their wrath.
You got to get on board on regulation. You got to stay out of the way of Gensler at the SEC and other regulators. Those hombres in Washington are not happy. And they poked the bear. FTX poked the bear. The bear's awake, and it's pissed. I think there'll be another set of hearings early next month, in March. They're going to keep coming. Elizabeth Warren's on a warpath right now about crypto being used for nefarious transactions. She's after, allegedly an $8 billion USDC transaction that went to a rogue nation. I mean, it just could, the tone of this market is so negative, it's probably time to get back in.
Kevin O'Leary concluded that regulations, including significant fines, are discouraging potential investors from investing in cryptocurrencies. Nevertheless, he remains positive about the cryptocurrency market's future. He predicts that as investors become more apprehensive about regulation, regulated exchanges will increase in value. If you found this video informative, please support us by clicking the thumbs up button. Don't forget to subscribe to our channel for the latest videos and updates. Thank you for tuning in, and we look forward to having you with us next time.